Good morning, traders. Happy Thursday. It's 8:01 a.m. Chicago time. Another gorgeous day here in Chicago. It is June 1st, 2023. Welcome to June. Just about 3 weeks to summer. New month. This is episode number 2474. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick sound check from anybody, please. Oh, Vernon, always coming through. Thank you for that. Here's what we've got right now in terms of the pre-market summary sheet from Convergent Trading. I want to remind you that you can get this when it drops every morning at about 8:50 Eastern. You can get it hot off the press at twitter.com/conv trading, CONV trading. If you set up a Twitter account or have one, you can follow and set notifications to on, and you'll see it. The current posture is mixed. As you can see, we have Europe popping higher, inflation in Europe subsiding. The U.S. is pretty much mixed to even, and so we have a mixed market coming in when it comes to risk exposure. Pre-market, we have Dollar General, we had Macy's, Hormel Foods. After the close, we have Dell, Broadcom. Yesterday, we have Victoria's Secret, and we had which auto company? I don't remember. It was a disaster, I guess. It's off about 30%. So the worst performer for this earnings cycle, apparently. The big thing right now is, well, we'll get into it here, but the big thing right now is the U.S. jobs report tomorrow. ADP came in yesterday, and now we have ADP came in this morning. JOLTS came in yesterday, and then tomorrow we have the non-farm payrolls and unemployment for the U.S. The debt ceiling ordeal dilemma, it passed the House overwhelmingly. Yeah, I think it was AutoZone. Thank you. No, was it AutoZone? I don't remember. No, it's one of the car salespeople. I don't think it's AutoZone. I don't remember. There's so much information, it just becomes a blur if it's not like top tier information for me. It's just getting older. I'm not retaining everything. The debt ceiling passed the Senate the House yesterday overwhelmingly, and as sitting in the Senate Majority Leader Chuck Schumer is promising that it'll push through quickly. He's got Mitch McConnell also pushing for it to be passed today or tomorrow. The deadline's June 5th. And then after that, it goes to President Biden's desk, and it becomes law. So that puts the debt ceiling dilemma behind us, and that dilemma ends for the next 2 years. So that pushes us into 2025, right after the next election is completed and the next inauguration. EU inflation lower than expected, U.S. ADP higher than expected, and interestingly, initial jobless claims slightly lower. So that's bullish. ADP higher. Initial claims lower, that's bullish on jobs, bearish-ish on the Fed. ECB's Lagarde, inflation's too high and set to remain so for too long. We will keep moving forward, determined and undeterred, until we see inflation returning to our 2% medium-term target in a timely manner. Good luck with that. So that's where we stand overall. Those are the key headlines. What we have today that's key is the ISM manufacturing PMI. That's an important one. Comes out at 10 o'clock Eastern. And then we have crude oil inventories, the EIA numbers at 11 because of the holiday on Monday. Normally these come out at 10:30 on Wednesday. We get, and then we get Fed's Harker later. What's interesting here is the Fed the Fed probabilities. This is, I think I showed you this on Tuesday, right? I showed this chart here on Tuesday's Trader Bite. And on Tuesday, we looked at June 14th. That day, if you go back to Tuesday's Trader Bite and look at this chart, it had a 30% probability of no increase in interest rates by the Fed in 2 weeks, and it had a 70% probability of a 25 basis point hike. Well, based on the comments made yesterday by one of the Fed speakers, the thing flipped. So now there's a 70% probability in the Fed funds rate futures. They're pricing in a 70% probability of a pause by the Fed. This is huge, versus a 30% probability of a hike. And if we go out into the future, you'll see that the probability of a hike in July is 50-50 basically. And in September, we start to see it. This starts to emerge here, where they're starting now to price in a probability, albeit 10%, of a reduction. So that's kind of interesting. I mean, it's a little bit far out. It gets thinner out, the farther out you go. But then you get these reductions that start pushing in. And it's because the Treasury market, which is where the smart money is, the Treasury market is really pricing in a recession. We have one somewhat in Germany already, and the stock market's not responding to it. So it's probably going to be a grind here through June in the indices, like we've seen, because we have strong jobs. We have really good earnings season. June finishes the first half of the year. It's the second quarter, so we'll start getting earnings in July. But at the same time, the Treasury market is really pricing in some sort of a disaster. So just keep an eye on that. That's kind of why the market's so disjointed. It's really hard to read into what's going on. Anyway, so I don't want to go on about that, but we're living in a very interesting environment. We're seeing a lot of similar things to 2007, 2008, and I'm getting these opinions from a variety of analysts that I pay attention to, and also what I'm reading on the Wall Street Journal and several other inputs. It's kind of interesting. And the curve itself is telling a story. The S&P, we have a balanced market this morning. The inventory is long somewhat, but nothing too important. The range is 21 points, less than what we had yesterday in the overnight session. Point of control is just above 4,200. So today is a 4,200 day yet again. Here's what I talked about yesterday as the key plan. Yesterday we were opening below, so this is the line for where the current market was in yesterday's Trader Bite, and you could see down below what I had talked about and what the key plan was. And the key plan was responsive buying, because we had a balanced day. On Tuesday, the expectations for responsive buying into 4,200 and 4,205. If you recall, I talked about this quite a bit. 4,200, 4,205, right? Those are the two numbers that I had mentioned. And the expectation is that it'll likely falter into the 4,200 or 4,205. And we're looking for a push lower into the 4185, as the closed captioning says down here. 4185, expected the single prints to be closed, and I expected some form of a base to be built right down here for the next leg down or for the bounce. So I only carried the scenario because that's as far as I can see based on auction the auction process, I only carried it to filling in the single prints, which is plenty. So the trade that I talked about is the short in the as close to 4,200, preferably in between 4,200 and 4,205 into 4,185. Here's what actually happened. So I'm showing you what was expected. Here's what actually happened. This is a 4-tick Renko chart. We open in a gap. We go up to 4,200 on the nose, pull back down, then we push through the 4,200. So we have a clear opening swing here, 4,200, and it goes to where? To 4204.50. Our number was 4205, and we expected a reaction of 4,200. So ready for it to fail at 4,200, give us a lower high, get short, look for 4185. That's one setup. The second setup is it pushes through 4,200 exactly as you see here. This is exactly how the auction is expected to work. Push through the 4,200 and I'm get into the 4205. We're backed up by the full session mid. In addition to value area low on TPOs, then it breaks back into the opening swing. Then you have your short location, and then it starts to fall. And then we're looking for 4185. Right. Let's see if I can get a line. Nope, I got a rectangle. Was not good enough for a line. I'm just not good enough with this mouse. Ooh. Waving, probably get a rectangle. So 4185 target from about 4196 or so, 4196, 97. And that's the key trade of the day. Scenario one was done in the first hour. And then what it did is it put in an IB low. Great. So the IB's done, the first hour's done. Pulls right back into that 4185 area right here. It's actually 4187 for the singles. Pulls right back, and then you would expect it to flag near the lows and then break lower. This is the expectation. But what we start to see once the low is put in, we start to see this large lots. I have not restarted my platform since the weekend, so I'm still using MBO data. So this delta is very, very accurate. But look at what happens to the delta here as it puts in the IB low and puts in this range extension break of the IB low, giving us the IB stat. We start to see large lots lifting and lifting and lifting and lifting and lifting. The effort made yesterday by buyers is pretty great in the face of very large lots selling, holding, selling, holding, and selling strong into the close. This effort here to push through our day-generated numbers all the way back to the other side, and if you're a Convergent member, you might have seen my warning that once it filled in the single prints on the way down, we had some single prints right in here. Once it filled those single prints, not to get short. So no on the short against the mid and VWAP here. No against the short on the full session mid, because at this point we've really extended up. So that was absolutely correct. Not always correct, but that was absolutely correct, and it went right back up to the prior high. So we ended up with a double distribution profile on volume and TPOs, and we ended up with a show of strength by the buyers, and the expectation is for balance today in that environment, to balance skewed to the long side as well. So what did we get in the overnight session? Balance, 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 right? So we ended up with this balance in the overnight session coming into today, which is exactly what I wrote. Let me see what I put down. I put down at the end of the session yesterday, strong selling, market on close imbalance. So the market on close imbalance came in at 6.4 billion sell side. We saw a lot of very large lots selling, but we ended up with a double distribution profile today. Very clear fight by buyers to defend what was left of Friday's excess low. This may lead into a balanced day tomorrow, barring news. And we've got a balanced overnight session. We have no price separation between the mid VWAP and the current price, and we are likely to tick-tack back and forth between the two distributions. Here's what it looks like on the TPO. There's your upper distribution. There's your lower distribution. This is the divider in between them. The divider in between them is nothing other than 41.87, 41.85, which was our target yesterday. So you can start to kind of puzzle in the jigsaw pieces that are kind of easily falling in place. And what this is likely to do to us today, given non-farm payrolls tomorrow, is it's very, very likely to make it so that today is a kind of filling in day in between these distributions, kind of a fill in the range kind of day. I would love to see it break away and pull back, retest the low volume node and continue. That would be freaking beautiful. I would love for it to squeeze out those late longs from yesterday, come down here, try to push back up and then squeeze those out, take out that low from yesterday. That would give us a nice little run into 41.50, the mid-century figure below, down here. But most likely, we're likely to see relative volume, today's RTH volume versus the 20-day volume for the same period. We're likely to see that be off 25, 30, maybe more percent. As the market kind of sits and waits. There's just nothing new to price in. No big earnings, no debt ceiling, no inflation numbers, no Fed happening, no moves. We do have a Fed speaker today who might move the needle a little bit. And we have ISM coming out, the manufacturing number coming out that might move the needle a little bit. But overall, please manage your expectations for today. This is a great time to really do some back testing, maybe walk some charts back. By the way, talking about walking charts, if you recall, I did this survey yesterday and the question wasn't very well placed. The question for the poll yesterday during the show was, how often do you replay your chart of the day? Let me pull that up here and put it in front of you. Here's the poll, right? How often do you replay your chart of the day? Let's enlarge this. How often do you replay your chart of the day? And most of you said never. And some of you are confused by what the chart of the day is. And the chart of the day is whatever chart you use to trade the day. I don't care if it's a 15-minute or a 30-minute or a 2,000 volume or a 20 tick, whatever. It doesn't matter. Whatever chart you're doing, I'm asking with 244 votes, which is a pretty substantial high confidence interval number of votes, or sample size, 38% said never, 33% said daily, which is impressive. And then weekly, at the end of the week, 18%, and only after a break, 8%. And I'm going to tell you that if you're not doing replays on a regular basis, especially in this environment where it's just back and forth, if you're not doing replays, you're not studying enough. You're not doing your job. And what does a replay look like? it is really as simple as whatever your platform's replay engine is. You go back, you set the session to the beginning of the day, and you start it, and then you basically play back the session bar by bar by bar. Yes, you're going to remember what it looked like or whatever, but that's not what's important. We want to play the session back bar by bar by bar. And what this does is it helps you visualize the flow. It helps you see the flow. It helps you become more in tune with the environment. This is like going out there and swinging a golf club with no ball. Like, you know, if you're an avid golfer, you're trying to be a professional golfer, you probably have a golf club in every room, and you might just pick it up and just swing it and swing it and swing it. And this is what it is for traders, right? So you could start your day. Let's set it to 8. You could start your day and play it back, and then just go back and play bar by bar by bar by bar, and then look at what the market looked like on the hard right edge as the chart was forming. And this really gets you in the flow. So I'm really not surprised by the low number of people that, or the high number of people that say never, 38%. All of you should be doing it. This is my advice to you, and it should be done on a daily basis, especially if you're having a hard time, especially if you're learning a new market, especially if you're not trading at all, and so you're not getting an immediate feel or you're not focused. Do your replays. Do your replays on a regular basis. Very, very important to do that, and I invite you to and challenge you to do that. So let's look at the big picture here. What the heck is this thing doing, okay? So we've had a lot of balance. We've had a whip down, whip up, whip down. Then we had a bunch of balance into the entire month of May. Was just bouncing around the range. And then recently we've explored up, explored back down into this prior balance, and then we ran up, went to almost 42.40, and we've come back in. We're still in a balanced range. The market is still confused as to what it should price in. And there's nothing on the horizon that's changing that. Nothing on the horizon that's changing that currently. And to me, there's more of the same. So instead of elaborating on this and going on and on and on, I'm going to spare you and say, you know, just use this time wisely. Use this time to, you know, hone in your plan, to do homework, to set targets, to work on your journal, improve your journal. And by the way, if you didn't watch yesterday's show, Futures Radio Show, episode with Jared Tendler, there was a lot of content there that is just so paramount. In fact, it's so important that I'm going to post the link for you here. Please watch this. There's some really important stuff in here that you need to understand and watch to start moving towards becoming an expert and improving your performance. So the show was live yesterday at 12 p.m. Eastern. We talked for an hour and 15 minutes. These shows are supposed to be 45 minutes long. Jared covered a lot, so did I. And I really think you should listen to it. And this is the kind of stuff that you work on in this kind of environment if you're not trading, instead of, you know, running Netflix in the background or gaming or whatever while your charts are updating. So just go do that. The scenarios for today, to leave you with that, actually one of the things I wanted to talk about is relative delta. Relative delta this morning, pretty positive across the board. But pretty small positive. We've gotten back down to below 4,000 here. I'm seeing price and delta moving in the same direction. This is further indication that we are likely to just go sideways here. There's just not much here to price in. Seeing that across the board. So when we look at the delta across the board here at the NASDAQ, They're trying to lift. The NASDAQ's relatively weaker than the ES right now. And then the Russell, pretty good lifting in the last half hour or so, but overall, price is not playing with that, and it just looks like it's going to be a sideways day, right? So the buyer stepped in from the low yesterday, took it almost to the RTH high, and then they came back to the middle, and we're opening in the middle today. That's all there is. I don't really have anything constructive in terms of a setup for this morning unless this thing moves out of bounds. And if it moves out of bounds, we have an open settlement price up higher at 42.15, and that would be the target. And then below, we have the 41.50. We have Friday's low as targets. Other than that, it is just a chop fest. Don't get chopped, okay? I'll leave you with that. Don't forget to hit the like button. Don't forget to subscribe to the channel, and I'll catch you tomorrow morning. Take care.